Hi, hello, vanakkam. And vanakkam is probably going to be the only Tamil word that I'm going to be mentioning in this video. This video is going to be completely in English. The reasons are quite a few. One of the major reasons is I am teaching and talking so much in Tamil that I will probably end up forgetting English. That is one reason. And another reason being, this is a suggested answer video. This is going to be a suggested answer or my version or my answers for the MCQs asked in the recently held Jan 25 Advanced Accounts paper. Since this is a suggested answer video, probably people apart from Tamil Nadu or people who don't understand Tamil, they will also be watching it. So I don't want to be irritating them. So I want to be talking in English. So let's see how it goes. And for those who have written advanced accounts and those who are currently preparing for law, you don't have to watch the entire video. I have answered or even circled the correct answers. I will just go through the entire PDF. You just have to see the options whether it is correct or not. You just can match it and then close the video. Go and prepare for law. This video is for not only for you. This video is going to be useful for the other people who are going to prepare in May or September. They can make use of this video. So this video will contain just the answers first and also the explanation of the answers. Those who are currently writing Jan don't have to watch the entire video. Just watch the next 2 minutes where I will be just going through the answers. I will just say the correct answer. Just see that, evaluate in your mind, and then if possible, put a comment how much you scored. There are 15 questions, right? Each questions carry 2 marks. So out of 30, how much you're going to get? Just comment that and then move on or get on with your preparations. So let's start. Scenario number 1. It is from cash flow statement. First, we will go through the questions. Question number 1, and probably I don't think the question numbers will be matching or even the choices will be matching. Each student will be getting a different version of the question paper, so probably your number and options may not match, but just see the answers. For one of the questions, the answer is purchase of goodwill. Then for another question, 1,54,500. Then for another question, 54,300. Next, 1,60,600 outflow. Then there was a question related to borrowings. The correct answer is 3,50,000 long term and 1 lakh is to be shown as short term. Then from another case scenario, the first question from the next scenario, there is a mistake in the question. None of the answers are matching with the correct answer. In my view, the correct answer should be, just a minute, 18 21 plus 2, 23. 23 minus 18, 5 lakhs. 5 lakhs loss should be the correct answer, but there is no option in that. I guess they made a mistake in the question where they said by paying cash off. Instead of saying by paying, they could have told by receiving cash off. If receiving cash was typed instead of paying, the answer would have been loss of 1 lakh. But anyhow, since they have typed a different word, we cannot say if the question was had been like this would have been the answer. So either loss of 1 lakh or just assume that it is a mistake and then they will give you grace marks of 2 marks. Question number 7, 29 lakhs, 4 lakh 87,500, impairment loss 6 lakh 25,000, donation is that permanent difference. Deferred tax asset closing balance 1,23,600. DTL closing balance 3,30,000. Reversal of DTA 16,400. And there was a question from AS16. It is not a qualifying asset, so one of the options will be mentioning that it is not a qualifying asset, so it has to be taken into P&L. That is the right answer. And last question, they will have a total cost of 3,55,000, I guess. So 3,50,000 is the 350 lakhs is the contract price, so loss of 5 lakhs is the right answer. So kind request to those who are at writing Jan 25, stop the video here. If at all you are watching the video, stop the video here, then continue with your law preparation. Those who are interested to know the answer, you can continue the video. Question number 1, cash flow. It was a straightforward question. It's a direct method. You just have to classify the transactions into three activities. We'll do that now. Cash sales. Cash sales is operating. Trade receivable operating. Rent from property held as investment. So income tax refund operating. Loan from bank, it is financing. Issue of shares, again financing. Sale of investment, it is investment. Trade payable operating. Office and selling operating. Trade commission operating. Underwriting commission is related to issue of shares, so it is financing. Redemption of preference share, again financing. Brokerage of sale of investment, it is investment. Interest on long-term borrowing, financing. Payment of overheads, operating. Purchase of goodwill. Goodwill you will be purchasing at the time of investing shares in another company, when you are almost buying off the other company. So it is investing. What are the questions? Which of the following would be considered as cash flow item from investing? As I told you now, purchase of goodwill is the investing activity. Other things, trade commission, whatever we have, other activities as operating, underwriting is financing, interest on long term is financing. The only item here which is investing is purchase of goodwill. It's a straightforward question. What would be the value of cash flow from operating activity? Whatever we have mentioned as O, just we can add and subtract, right? Whatever is mentioned as inflows, just add it. Whatever is mentioned as outflow, just subtract it, and you will get it. You will get 1,54,500. What will be the value of cash flow from investing activity? Same thing. Inflows add, outflows deduct. You will get 54,300. Cash flow from financing activity, it is 1,60,600 outflow. Probably for the last one, you don't even have to see the financing activity things, activity items. You can just add these two, 1,54,500 and 54,300. Add these two. Either you can find the answer like this, or at least you can cross verify like this, right? 154,500 is from operating, and then 54,300 is from investing. So total increase is 2,08,800. What is the opening balance? What opening balance is 72,000. Add it to this number. You are getting 280,800. But the closing balance is only 120,200. Subtract it from that. That means 160,600 should have been the outflow in the other activity, which was the third activity, financing activity, right? So financing activity outflow is 160,600. Either you can do this missing figure concept, or you can just add all inflows and subtract all outflows. That's it. This question, Glow Limited had taken a loan of 5 lakhs in June 23. The loan is to be repaid in 10 half-yearly equal installments starting from December 23. So first of all, 5 lakhs divided by 10, you will be getting 50,000 per installment starting from December 23. So on December 23, they would have paid the first installment. Determine how the remaining loan will be classified in the balance sheet as at 31st March. How much will be the remaining loan? Out of 5 lakh, one installment is repaid, so 50,000 would have been reduced. 4,50,000 should be the remaining loan outstanding. But will the entire 4,50,000 be classified as long term? No, because in the immediate next 12 months, you will be repaying 2 installments, right? Probably the next installment will be in June. First installment is in December, right? So next installment will be in June 24, and then the next subsequent installment will be in December 24. These 2 installments fall due within 12 months from the balance sheet date. So 50k into 2. 1 lakh should be classified as short-term borrowing. So out of 4,50,000, 1 lakh should be classified as short-term borrowing. So the only option that corresponds to this answer is 3,50,000 long-term, 1 lakh is short-term. So option B. So next case scenario. In the next case scenario, they have asked about, I think this is the combination. They have considered AS10, AS28 also is involved. It is a combination. So, and even AS12 government grant, 10, 12, 28. All these 3 standards have been combined into one. We'll go through the question. On 1st April 2019, Black Limited received a government grant of 15 lakhs for acquisition of a machine costing 50 lakhs. So for 50 lakhs, they have received 15 lakhs. That means 50 minus 15, 35. I mean, there are two ways to account, but in this question they would have mentioned like the grant was credited to the cost of the mission. So they are crediting to the cost, right? So 50 lakhs minus 15 lakhs, 35 lakhs is the net amount, right? The life of the machine is expected to be 10 years and estimated residual value at the end of 10 years is 5 lakhs. So 35 minus 5, 30 lakhs is the depreciable amount, depreciable value. Divided by 10 years, so each year the depreciation should be 3 lakhs. Right. The company charges depreciation on straight line basis. Due to non-fulfillment of certain conditions, the company had to refund the entire grant on 1st April 2021. Grant was received on 2019, refunded on 2021. That means 2 years has elapsed. Correct. So 3 lakhs is the depreciation per year into 2, 6 lakhs. How much is the net cost? Net cost 35 lakhs. From 35 lakhs, reduce to 3 lakhs. That means 6 lakhs would have gone. 29 lakhs is the book value as on the date of refund. How much we are refunding? We are refunding the entire grant, which is 15 lakhs. So 29 lakhs plus 15 lakhs, we will end up with 44 lakhs, right? On 31st March 2023, just a second, just ensuring whether it is getting recorded. On 31st March 2023, Black Limited received certain indications of impairment of the machine and the recoverable amount was assigned to be 28 lakhs. Okay. So as per AS 28, your carrying amount should be either the book value or the recoverable amount, whichever is lower. So they have mentioned that recoverable amount is only 28 lakhs. Okay, first we will calculate the what will be the carrying amount as in the date. See, first of all, after this refund, the book value would have become 44 lakhs, but residual value is 5 lakhs. So 44 minus 5 will give you 39 lakhs. This 39 lakhs is going to be depreciated over the remaining useful life. Remaining useful life out of 10, 2 have already elapsed. So 8 years. So 39 divided by 5, you will be getting, 39 divided by 8, 39 divided by 8, you will be getting 4,87,500, right? This 4,87,500, you should charge depreciation per year. But how many years have elapsed? It is 31st March 2023. There are 2 years between this period, right? So 4,87,500 into 2. $9,75,000. This $9,75,000 would have been reduced from the book value. Book value is here, which is 44 lakhs. So you are getting 34 lakh 25,000. On this date, your recoverable amount is just 28 lakhs. So this 3425 should be made 28. That means 6,25,000 is your impairment loss, right? Okay, and the revised useful life is only 4 years and residual value is nil. That means this 28 lakhs has to be depreciated over the next 4 years and the residual value is 0. So 28 by 4, which is 7 lakhs. On 1st April 2024, 1st April is nothing but 1 year from this on this time. So 28 lakhs we would have reduced 7 lakhs probably. So 21 lakhs would have been the book value as on that date. What happened on that date? The company exchanged the machine by paying cash of 2 lakhs and new machine, that is 1 second, just a minute. New machine's amount is 18 lakhs. Okay, I'll just rub it off here. Right. So 21 lakhs is the book value, and as per the question, they have mentioned like exchange the machine by paying 2 lakhs. That means 21 lakhs asset they have given, 2 lakhs cash also they have given. That means 23 lakhs is the outflow, for which they are getting a new machine for 18 lakhs. So 23 lakhs is your outflow and they're getting a new machine for 18 lakhs. That means 5 lakhs should have been your loss. But as I already mentioned, there is no option corresponding to 5 lakhs. So I am guessing what they would have thought, what they would have had in mind is this paying cash is not really paying cash, it is receiving cash, I guess. So 21 lakhs asset they are giving, and they are in return they are receiving 2 lakhs in cash and 18 lakhs machine. That makes it 20 lakhs. So they are giving 21 lakhs and they are receiving 20 lakhs, which is resulting in a loss of 1 lakh. So probably this would have been in their mind when they were setting the question. So the question which the examiner had in mind, and the question answer is 1 lakh loss. But actual question which is type, there is no answer in the options. It is a mistake. I am guessing 99% I am sure they will be giving 2 grace marks for this question. What will be the carrying amount as on 31st March 2021? This is after 2 years. 2019 was the date on which they purchased asset. This is 2 years after that. After 2 years, I think 29 lakhs was the number. So here it is, 29 lakhs. After 2 years of depreciation, 35 lakhs minus 6 lakhs, it would have been 29 lakhs. What will be the depreciation to be charged on the machine for the year 31st? Okay, after this change in number, I told 4,87,500 is the depreciation. That would have been charged for 2 years also, that we have already seen. Then 6,25,000. What is 6,25,000? We have seen 34.25 was the book value as on the day when the recoverable value was just 28 lakhs. So the difference between these two, 6.25 lakhs, is an impairment loss that should be debited to the profit and loss account. That's it. Then case scenario number 3. The following particulars are stated in the balance sheet of Star Limited as on 31st March 2023. Deferred tax asset 1,20,000. Deferred tax liability, credit balance obviously 2,10,000. Generally they will adjust and give only one number in the balance sheet, but here they have given you separately, so you should also see it separately, whether it is a DTA creation or DTA reversal, DTL creation or DTL reversal. I am happy. The only question that I am happy about is this question, because you should think to answer this question. And DTA creation, DTA reversal, DTL creation, DTL reversal, all these 4 things should be seen individually to get the correct answer. So this is probably the best question out of the lot. Depreciation as per accounting records 12 lakhs, depreciation as per income tax records 18 lakhs. What is happening? In income tax records, 6 lakh depreciation is higher. If a depreciation is higher, income will be lower in income tax. As per income tax, income will be lower. If income is lower, income tax also will be lower. That means they are demanding only less tax now, which means they will be demanding more tax in the future when the reversal happens. So since they are going to be asking for more in the future, we need to create a liability now and keep it ready, right? So the 6 lakhs will result in a DTL, and the amount of DTL would be based on the tax rate. Tax rate is 20%. So 6 lakh into 20%, you will be getting 1.2 lakhs of DTL. Currently there is a DTL of 2,10,000. This is going to be additional DTL. Okay. Interest paid accounted in books on accrual basis but paid on 15/5. Currently we are seeing the books for 23/24. For 23/24, interest they have paid on 15/5/24. Just the immediate year, right? Actually, interest will be allowed only if it is paid within the due date for filing return, not before the end of the financial year. You don't have to pay it within 31/3. Even if you are paying the interest before the filing date as per 139(1). Sir, what you are talking about income tax and all? Those who know me, they will be thinking like, what you are talking about income tax? Okay, I don't know income tax, but I know a little bit income tax. So 139, which is related to accounts. Just because I want to teach accounts, I know a little bit of income tax. So 139(1) is the section for filing return, right? So they would have given the due date, right? Probably 31st July or 31st October, something will be the right. Before the due date, if you pay the interest, it will be allowed as reduction in that year itself. That is in that 23/24 itself, in that previous year itself, they will allow. So this 4,50,000 is not a permanent difference, is not a temporary difference, it is not a difference at all. So you don't have to bother about it. You don't have to do anything for this thing. Just ignore this 4,50,000. That's it. So next, employer PF contribution. Okay, PF contribution disallowed for tax purpose in year 22-23 but allowed in 23-24. That means in the previous year it was disallowed. Currently it is being allowed. Okay, fine. In the previous year it was disallowed, right? That means you would have been forced to pay more tax. If you are paying more tax than necessary, it is a deferred tax asset. That means deferred tax asset would have been created last year. to the extent of 82,000 into 20%. I think 82,000 into 20% will give you 16,000. 80,000 20% will be 16,000. 2,000 20% will be, I think, 400. So 16,400 DTA would have been created last year, and that DTA will be getting reversed this year. That's it. So this is a DTA reversal. So whatever number they have given here, DTA, from this the 16.4 should be reduced, right? Then next question, what is the next point? Unamortized preliminary expense as per tax records. That means as per tax, 1 lakh is not at amortized. That means not at allowed as expense. But we would have allowed as expense. They would have not allowed. They would have not allowed. Therefore, they would have demanded more tax. Therefore, it would have resulted in DTA. Now, currently, it will result in DTA. So, DTA creation, 1 lakh into 20% will give you 20,000. This should be added to the DTA, right? I guess that covers the question. Which is the permanent difference item as per AS? Oh, donation. We skipped donation. Oh, last point is donation. Sorry. Last point is donation. I wrote 20,000 over donation. So donation will be, we will be as and when we are paying, we will be considering as an expense in our books. But in income tax, they will not be allowing the donation, and they will not allow now. They will not allow in the future. So it is a permanent disallowance, permanent difference. So the first answer for the permanent difference is donation. PF listed out last year, currently allowed. Unamortized preliminary, so it will be allowed in the future. Depreciation, there is a difference, but will be over a period of time, everything will be allowed. So donation is the only answer. What would be the value of the DTA as on 31/3? Okay, DTA, there is an opening balance of 1,20,000. From 1,20,000, 16,400 should be reduced, and 20,000 should be added, right? This 1 lakh into 20%, 20,000 should be added. So 1,20,000 plus 20, which is 1,40,000. 1,40,000 less 16,400. I think 1,23,600 should be the DTA closing balance. What would be the value of the deferred tax liability? I think we already had some amount in opening. We had 2,10,000 in the opening, and in the current year 1,20,000 was created. So add these two, 2,10,000 plus 1,20,000, you will get 3,30,000. So 3,30,000 is the DTL as on the closing date. That's it. What would be the value of reversal? As we already have seen, 16,400. That is 82,000 or something, right? 82,000 into 20% is the DTA reversal. AS Limited borrowed 25 lakhs from ABN company during the financial year 23-24. Use these funds to invest in equity shares of that another company. The another company is implementing new projects. So with this future process, okay, what 25 lakhs. As of 31st March, since the project was not complete, the directors of AS Limited capitalized the interest on loan amounting to 2 lakhs and thus added the amount of interest to the cost of investments. Market value of these investments, okay, fine. Identify that. That is, we have invested in some other company, and that company is doing some project which is not yet completed. So what this company, the first company is saying that since that project is not completed, as per AS16 borrowing cost, we have to continue to capitalize these interests. Nothing doing, because it should be a qualifying asset for us in order to capitalize. It is not a qualifying asset for us. Probably it might be a qualifying asset for the other company in which we have invested. Maybe they would have capitalized interest. I'm not sure. They're just guessing. Maybe they are allowed to do that. But as far as we are concerned, we have invested only in the shares. And shares, as soon as we make the payment, we are getting the shares. If we want to have the shares, we can hold it. If we don't want, we can sell it and go. So there is nothing qualifying about this asset, right? Qualifying asset is an asset which necessarily takes a substantial period of time, right? Necessarily takes a substantial period of time to get ready for its intended use or sale. Here the share can be used or sold immediately, so it is not a qualifying asset. So there is one option which is saying AS Limited invest in equity share, which is not a qualifying asset. So that is the right answer. Hence it should be taken to P&L. It should not be capitalized. AB Contractors undertakes a fixed price contract of 350 lakhs. Information related to contract is given as under. Material purchase 125 lakhs. Add this. Labor charges, add this. So 125 plus 95, you will get, I think, 220. Out of 220, unused materials, that means closing stock, it is not consumed. So from 220 reduce this 22, I think you will get 198. Estimated future cost. After this 198, we are going to incur another 115. Add that also. That means 200, 315, 313, I guess. 313 is the cost. Payment received as part payment of contract is not relevant for us right now. Machinery used for 4 years for the contract. Original cost of the machine is 210 lakhs. Expected life of machine is 20 years. Machinery used in the 4 years. That means 210 lakhs is the total thing. Out of which we are going to use it for 4 years out of 20 years. That means 4 ones are 4 fives are 5 ones are 5 42s are. That means 42 should be added. From 3 lakh 13 add to 3 lakh 13 add 42. I guess you will get 3 lakh, this number you will get, I think 355, right? 355 is going to be a total cost, but the entire contract price itself is 350. For 350 contract price, you are going to end up paying a cost of 355. So now itself you know that you are going to incur a loss of 5 lakhs. So the entire 5 lakhs should be provided for right now. So loss on contract is 5 lakhs. So this completes the question. I guess it is a very easy set of MCQ asked in this question. So comment below. If those who have watched till now, thank you very much for watching it. Comment in the comment section that how many marks you got. And regarding the remaining 70 marks descriptive answers, I'll be uploading soon, probably tomorrow. After your law exam, you can see the answers. Thank you.